Hey guys, what's up? So in today's video, I'm going to be covering the most requested stock by far on my channel, and that's NIO. Now I gotta say, after doing a ton of research in this company, it's actually very compelling. What NIO is, they are an electric car manufacturer, but they sell cars in China. And China has a population of 1.3 billion, so this is the biggest market in the world. So there's lots of potential for huge amounts of growth in this company, and I think they're well positioned to take advantage of that. Now NIO does a few things quite unique compared to any other car manufacturer that I've ever seen. And I think that they do these things in a more efficient and just an overall better way than other car companies. One of those things is NIO House. So this is NIO's version of essentially a car dealership. Except they call it NIO House because it's a lot more than just your typical dealership. As you can see here, they got all kinds of different things at this NIO House. They got a library, a cafe, a joy camp. I guess this is for your kids to play while you shop for a new car. Of course, most importantly, they have a gallery that shows off their cars and much more. So I think this is really revolutionary in the car industry and is just way better than your typical dealership in my opinion. So I really like when a company is able to innovate and outdo their competition, and I really do think in NIO's case they have done that here. But it doesn't stop there. They also have something called NIO Power, and this is probably the most interesting thing about the company I've seen. So essentially they have these charging stations all over the country that you drive into, and it can swap your battery in 3 minutes, which is really one of a kind, and I've never heard of another car company doing this. And of course they have your typical power charging stations as well, and then they also have something called NIO Power Mobile. This is another great idea. So what it is that you can, I guess, call NIO Power and they'll drive to wherever you're parked and charge your car with this van here. Now I think this is going to really help push people to buy electric vehicles over your typical ICE vehicles, because I think one of the biggest deterrents when buying an electric vehicle is charging your vehicle. You know, charging stations aren't everywhere in the country, and you need to be parked there for an extended period of time to charge your vehicle, and people overall just don't like this process typically as much as pulling up to a gas station and filling your vehicle in 5 minutes then leaving. But this helps solve that issue, and I like to see NIO innovating and coming up with good ideas. So I really think that this is going to be a huge success as well, and this definitely could be a deciding factor for people when they choose what electric vehicle manufacturer they want to buy from. When they see NIO offers these other services that's never been seen before, I think this could definitely help push sales by a lot. So that's essentially what NIO is, but let's look at their stock and see what it's been doing. I want to dive into the financials with you guys and then go over some news afterwards. So firstly, let's look at their chart. So this stock has been on a rampage this last 6 months. They were trading down around $2 back in March, and now they're up at $28. So they've seen 1,000% return in 6 months, which is quite scary to get into when you see that. But I do believe that this type of gain actually is somewhat justified. So let me show you why this could be justified. So I realize it definitely does suck to get in a stock after it surged 1,000%, but NIO really is a promising company. And in my opinion, it could definitely be a leader in the EV market in China. And that's something you can't put a price on. The China market is the biggest in the world. And we're going to go over some of their financials and see how much more room they have to grow. So first I do want to show you, I guess you could say it's a negative, and that's their price to sales ratio. So looking at their financials, they currently have a market cap of 34 billion. Now this is just a drop in the bucket of what it could be tackling the China EV space. In my opinion, this could definitely be a $200 billion market cap in the next 10 years. So they have a ton of room to grow, and as long as they can grow at an extremely fast pace, then I think their current share price can be justified. And so we're going to cover that part in just a second, but while we're here, we do need to look at their price to sales ratio. So their PS ratio is 26, which is, I'm not going to lie, this is quite high for a car company. If we compare it to Tesla's is 16. And we all know how richly valued Tesla is. So we can't ignore the fact NIO is very richly valued. So there's a lot of expectations baked into this company. But I wouldn't let that deter you just understand that you are buying into a company that is technically overvalued by traditional measurements. But on the flip side, they're growing faster than almost any car manufacturer out there as well. We can see in 2019 in September, they were generating $1.8 billion in sales. Now fast forward just 1 year and they're at 3.7 billion. So they're growing at 100% growth year over year right now. That is more than enough to justify the valuation where they're at. But don't get me wrong, they could definitely see a pullback or a correction in the short term. But I'll give you a strategy towards the end of the video on how you can deal with this. But first, we need to look at one other thing that is actually quite important, and that is their operating cash flow and their free cash flow. So you need to understand NIO is not cash flow positive. They're losing a lot of money, but they're also trying to grow as fast as they can. So they're going to be spending a ton of money to grow at the rate they are. I mean, you can look at these numbers here. It is quite substantial how much money they are losing on a yearly basis. However, in most cases, this would really scare me out of investing in a company. But I also do believe that NIO is in a unique position where this shouldn't concern you as much as it normally would. And that's because NIO is pushing a large amount of their capital to growth. Once NIO is very big, they can easily transition into being a more profitable company and cut back on all these expenses that come with growing at 100% rate year over year. So I think NIO is honestly going to be able to deal with this in the future. But it's definitely something you want to keep an eye on and make sure it doesn't get out of hand. Now you saw how much the share prices ran up in the last 6 months. Well, just recently the share price shot up 30%, and it's likely because of the amount of news that has been pushing the stock higher. It's really incredible. I'll go through some of the articles with you guys here. So JP Morgan on just October 14th said NIO stock can double. It's now a third of the way there. I mean, coming from JP Morgan analyzing a Chinese stock saying that is definitely going to have a positive reaction on the share price. Another one by Forbes, NIO stock popped 26%. 3 reasons it's not too late to buy. Very interesting how a stock popped 26% and even Forbes is saying it's not too late to buy. And I agree with them though, it's not too late to buy, but if you're going to buy, there is a safe way to buy into this that I'm going to cover in just a second. Another article by MarketWatch, NIO stock rises towards another record after Citigroup says buy. Boost target by 83%. They boosted it to $33 a share, which is still a little bit up from the current price of $28. Okay, so looking at NIO, I think that they are very unique and well positioned EV company in China. And before I forget to mention this, they also, I believe, received $1 billion from the Chinese government. Now, this is so important in a country like China, having the government back you. I mean, China runs a little bit different from other countries, let's just say, where if they don't want you to fail, I think they have the power to prevent that. So that is not to be overlooked. And yeah, that should somewhat go into your investment decision. It does for me to a certain degree. But anyways, so very unique EV company with what it looks like good products. I like their NIO House. I like their charging stations. I like how they innovate and do things differently than traditional auto manufacturers. And I like that they're targeting the biggest market in the world. And they honestly have a good shot at being a market leader there, especially with the government backing them up. And then looking at their financials overall, they're definitely not undervalued, but looking at their market cap and seeing the potential of how much they could generate through the auto sales, through these different charging stations and everything, it is really just a drop in the bucket right now. So personally, I'm not too worried about the valuation, but I do hate to jump into a stock after 1,000% rise. So for me sitting on the sidelines, I would love to see even just a 10% correction to jump in this stock. But nonetheless, this stock could easily just keep on running. It has the potential, it's a good company, and there's really no way in 10 years it doesn't trade at multiples higher than where it's at right now. So I don't think you could go wrong with buying the stock. You just need to understand you are at risk of a correction occurring. So my suggestion is, if you are going to buy in the stock, is to dollar cost average in it. Say you want to invest $10,000 into NIO. In my opinion, the best way to do that would be dollar cost averaging it, say in 4 different chunks. So if you have the $10,000, you put in $2,500 a time. Maybe you put in $2,500 every 2 weeks, maybe once a week, maybe once a month, but just not all at once. That way you limit your risk to a correction and you have money available to buy that dip. And that's also a reason why with almost any stock, I recommend that you dollar cost average into it, because it sucks to have all of your money into a stock at once and then it corrects in the next week. Now, instead of having the opportunity to buy the dip, you're contemplating selling the stock, which is the worst thing you should be doing. So anyways, that would be my suggestion on how you should buy into the stock. And yeah, there's a lot more I could cover on NIO, and so I will do future videos on NIO. I think it's definitely a really interesting stock and I would like to get into it at some point. So yeah, anyways, I hope you guys enjoyed this video. If you liked it, please drop a thumbs up. Feel free to subscribe if you want to see more stock related content. I upload almost every day of the week. And don't forget to comment down below if you're currently a shareholder in NIO or planning on buying in the future. Thanks for watching the video. I'll see you guys in the next one.